Welcome to Thursday, everybody. Welcome to our long verticals and diagonals webcast. I'm Connie Hill, and every week we get together here and talk about how we might use these two strategies for opportunities that we're seeing. Now, things kind of changed a little bit over the weekend with the war in Iraq and what was going on there, and the disruption of oil and gas services has kind of taken a little bit of center stage. And so, what I want to do today is talk about where we might find some of those little opportunities that maybe have really bloomed over the last week or so in terms of what that war might impact. Okay, well, the impact could be very great, but these are just a few ideas. Now, I hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having Barb Armstrong, skier girl, in the chat with us today. And glad that Barb's here. She's a great coach. She's a friend. And she's here to help me answer any questions that maybe I can't quite get to, because I'll keep my eye on the chat. Barb will look at, keep her eye on there as well and help me out with some of those things I can't quite get to. All right, let's go through our disclosures and lay out the agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about here is intended for education and information only. Don't consider a recommendation. We'll be using the Paper Money software application. It's what you download to your computer. It's the most robust version of thinkorswim. We'll use some of its features here today. When we're talking about probabilities, keep in mind they're theoretical in nature. Past performance is no guarantee of future results or success. Past performance of any security or strategy does not guarantee future results or success. All right. Typically, we'll just see what kind of announcements we might have. And then I want to talk just a little bit about the structure of long verticals versus diagonals. They're kind of similar, but they have a little bit of uniqueness to them. And you guys asked some great things. We had a survey last week. We had some great response to that survey. I appreciate that. And I've written down several things for us to cover in the next couple of weeks. A lot of question about diagonals, which we're not going to touch on a lot today because we're going to be focusing more on long verticals. Okay, but we'll hit a couple of your questions. So just a little bit of difference, some of you might be a little bit new to these strategies. If you have not been through the Getting Started with Options series, then you might be missing both of these strategies. Now, one of them, long verticals, typically we do tackle in the Getting Started with Options is one of the basic strategies to know and understand. Diagonal options are a little bit more advanced. And so in this class, things will be a little bit more advanced. So I want to warn you of that. But have no fear, ask your questions, all right? So a long vertical is where we're using a leg where we buy and we sell. We're creating a debit spread, and it's in the same month, both of those contracts. Now, a diagonal, it can be constructed a lot of different ways, but a typical diagonal, you would buy an option and then you would sell another option, but the dates are going to be different, okay? And you can construct these in a number of different ways. And so that's one thing that we want to be aware of is, we're going to be using different time frames here. What is going to be the impact of using different time frames? Is something to be aware of. Now, what I want to do is take a look at some new potential opportunities, okay? Things have changed a little bit over the last week, like I said, and there are some stocks that I think could be poised to have some decent-sized moves. Now, they're not guaranteed to, right? I don't have a magic whatever to let me know that. Maybe you do, but I don't have anything magic, right? But they're looking like decent setups, and that's the best we can do, right? Is look for something that we might want to look for to take advantage of that. So let's head over there. So we'll put on some new trades. I do want to spend some time on a couple of the trades, a little bit of trade management we need to spend some time on. So that will follow. All right, let's head over to my thinkorswim. And these are our current trades, which we're not going to talk about quite yet. And let me just clean this up a little bit. All right, those are the only ones we might look at. All right, what's the S&P doing today? Let's just take a real quick look. It's kind of been going up, down, sideways, sideways. And you can see, yeah, pretty much it's going sideways, sideways still, like it has the whole rest of this this year. One thing that I'm watching for here, I drew in this new line here yesterday because we have a lower high here, right? It's lower than that previous high. And even though we've got some steady support down here at that 67 level, I'm interested to see if it uses this as a diagonal resistance if it rolls down. Okay. If it rolls down, we might have the beginning of a descending triangle forming, which can be a bearish continuation pattern. Now, right now, we've been in a sideways pattern. And so really maybe a break of this support might be significant. However, we might want to keep in mind what happened here 2 days ago, where the market, I mean, it went way down. It's looking like it broke that support area. Right? And you're thinking, oh man, it really broke it. And then maybe, I don't know, maybe after a couple hours after the market started rolling, then we saw some buying activity just buy that clear back up so that it actually closed above that support area. All right. Let me look at golf and a golf, tennis, guitar song. That's kind of an interesting name. I think I have an idea what your interest might be. You have a hard time figuring your win dollars or lost dollars on options. What is a way to download a report showing profits and losses for options traded for a particular ticker symbol over, say, 6 months? Download a report showing profits or loss, and I'm going to say on your own trades. We actually touched on this last week. If you were not here last week, I'm going to recommend you go find the archive, and I'll take you there real quick. Well, I hope real quick. Let's do this. Let me move this little guy over here. And what I want to show you is where our archives are stored. Okay. So if you're a Trader Talk subscriber, this is what you're seeing. You come over here. You can see what's going on right now and then what's coming up today. And then one thing, if you go over here and you go playlist, then you'll see the different playlists of the classes, and you find I haven't seen where it is in this order right now. Let's keep on going. We're looking for diagonals and long verticals. And what you'd want to do, you'd go into, let's see, I'm not sure. So that's a different one. Long verticals and diagonals. Here we go. Okay, so what row is that? 1, 2, 3, 4, 5, 6, 7, 8. And then go into this playlist. And last week, those of you that were here, we talked about specifically how do we keep track of these values, especially with diagonals, because it can be tricky. And so I showed you 4 different ways that you could do it. And rather than rehashing through that, I'm just going to refer you to that from our last week. Barb is letting you know there is also a trading journal about that. And Barb, sounds like Barb talked about that a little bit as well. Very good. Let's carry on. If the S&P's down, what do you think the Nasdaq's doing? Let's just take a quick look. It was up, looking like it was going to go up a little bit earlier today. It looks like that's maybe sold off. So that's pulling back a little bit. Could we do the same thing here where we draw in a diagonal resistance? Yeah, we totally could. What would that look like today? It would look a little bit like this. And again, looking for there could be some strong horizontal support in here, maybe about that 24 and change level. Okay. So again, kind of broke through there a couple days ago, but then rallied right back up. So a lot of sideways activity. All right, given that, let's talk about some potential setups due to the kind of the new, I was going to say, global environment that we're in. Now, knowing that a lot of the factories might be offline, a lot of ships that are stuck in harbors, that is going to influence perhaps oil energy, natural gas, things of that nature. One I wasn't aware of until I just looked it up today is olefins. I'm like, what the heck are olefins? We're going to look at a stock here, LYB, and this is Lyondell Basel Industries. And I'm going to pull them up here. I want you to see here, I've got a 1-month performance column. I've got a 3-month performance column showing us, are these stocks moving or not? When stocks are moving pretty big, we might want to take advantage of doing something like a long vertical to see if we can take advantage of what has been happening. Doesn't mean it's going to continue. But so I looked up this company. I'm like, what are olefins? Anybody know what they are? If you think you know, I want you to type it in. No Googling, no cheating, okay? If you know what it is, just off the top of your head, chat it in there. Okay, I'll give you bonus points for that. But I just know where they are. And so I had to look it up, and it's a petrochemical compound derived from petroleum. Okay, so something is using petroleum, but they are building blocks for plastic and synthetic fibers. Now, that doesn't sound all that exciting, but if it's gone up 15, almost 16% the last month and gone up 52% in the last 3 months, then we have an idea this stock could be a mover. Now, what was I seeing in it today as far as, giving us an entry signal? Yesterday, it looked like maybe it was breaking through some resistance here about 60. Wasn't totally definitive, okay? But today we are definitely getting a little bit of follow through. We get a little bit of a gap up that maybe this thing ready to do a little bit of running. It's ATR that I have down here. It's average true range. Notice how just in the last few days it's kind of spiked up here, saying, oh, the price range is getting a little bit bigger, a little bit wider. So now the average true range looks like it's $2.82, which means from the low to the high, that's the range this has been trading in, which might give us an idea that maybe it's going to continue. We can see some really decent volume moving in here today. It's almost at its average volume, and we're still pretty early in the trading day. Okay. So Kevin had a guess of chemical. Mary said oil, chemical, Kelly. Sharon says chemical for fertilizer. I was tempted with that, Sharon, with the fertilizer. And polyolefin is a very common fabric, says Mary Burns. And now we all are more enriched in that little area. So let's go take advantage of this. All right, so we see the setup here. Let's come over here to the trade tab. Let's see, does this thing have decent liquidity? Well, so far this morning, it's traded over 5.8 million shares. So yeah, some decent liquidity. And let's see what options they have available. Now, these guys do not have weeklies available, okay, which should mean hopefully the monthly options are fairly liquid. Now, generally speaking, we'll use maybe looking for 20 to 40 days worth of time in sometimes when we're setting up verticals. That's kind of a sweet spot. So we've got 15, which is a little bit lower, and we've got 43, which is a little bit higher, but not that much. If you were concerned that you wanted a little bit more time for the play to develop, you'd go out here and choose the April options. We're going to be a little bit more aggressive on this one. We're going to go for the March 20 options, and we're just going to put in place a long call vertical here. Spread is a little bit wide, which when the VIX is up and it's up kind of in that 20-ish area, above 18, then we typically are going to see a little bit more option pricing into each of the prices of the options, so more volatility, I should say, pricing. And sometimes we see it spread out a little bit. And sometimes if we want to be in an environment where there is volatility, we kind of have to just recognize that and realize that options might be a little bit more expensive. Okay, I think that's kind of what we're looking at here. 55%, 49%, 50%. These are not astronomical, but they are in a little bit of a higher range. So what we're looking at here is we're starting here $66. So many people will start maybe at the money or in the money for that first strike price. That's going to be our long leg. And then we're going to sell something a little further out of the money. And we've got a couple of choices here that we could use. We're going to start at 65 as our long leg, and then we could sell the 67.50 or we could sell the 70. Now, this may have changed a little bit since I was looking in here initially. So let's just kind of see here. We're just going to say buy vertical. And I'm going to move this up because I want to see, well, what is our debit here? Well, we could risk $1.30, and I'm just going to lock that into place so that we could make what? Well, it's going to be $2.50, the difference in our options here, right? The strike price, that's at $2.50. So $2.50 minus $1.30 means we'd be looking at about what? $1.20. We'd be risking at $1.30 to make $1.20. Well, is that a decent probability? Well, it could be. The probability of this option expiring out of the money is 42%, but we would want it to expire in the money, which is about what? 58%. We just take the opposite of that. Okay. So about 58%. So it's getting pretty close to higher probability, which many times in a long vertical, we don't see that high of probability, okay, generally speaking. But let's go ahead with this. If somebody wanted to put out a longer target on that, you could consider doing the 70, and you can see there's decent open interest here. A little bit of activity taking place here today as well in that volume column. If somebody were to do that, you might consider going out a little bit further in time, meaning maybe go out to the April contracts if you want to look for a bigger move. Looking for a smaller move, we're going to be a little bit aggressive trying the March contracts because we're already in the month of March. But it has a little over a couple of weeks to progress here. Okay, so CB, that's the difference between the March and the April. A little bit more aggressive would be March. A little bit more conservative, you could do April. Okay, we're just going to pick one of these, so we're just going to go with this one. In this class account, we can risk up to I think we got us up at $2,000. I don't see where that is, but typically we'll risk up to $2,000 in this class. So let's do a little bit of math here. If we can risk $2,000 and we know that we would be risking per contract 130, we can get some decent contracts here. So 2,000 divided by 130 says we could do 15 contracts. Now, if we were seeing little dinky numbers like 1855, 123, we probably wouldn't feel comfortable doing that many contracts. We'd go, maybe not. Where we're looking at the numbers that we're looking at, 65, which that's a little bit hidden. There we go. There's our 65 with over 2,000 contracts, and then we've got 226. We'll probably be okay there. All right. So let's do it. Let's go 15 contracts. And if you were not comfortable with that many contracts, and when you position size your own account, it could be completely different, right? If you can risk $200 a trade, then you could do one contract, and that's okay, right? That's how we build smaller accounts. Barb does a fabulous job in a class that I think a lot of you go to. That's that trading a smaller account. She does that on Mondays and Fridays. Okay, so something like this would fit nicely in that kind of portfolio just because, hey, 130, that's reasonable. Now we're going to do a first trigger sequential here, create an opposite order, and something that we typically do in this class is we put in a target for the profit. And we say, if we can get this amount of profit out of us, get us out of the trade, right? So in this case, we're trying to make 120 because we're risking 130. And so 120, what would be a portion of that you'd feel comfortable with? I ask this all the time, and sometimes you guys will say 50%, 60%, 80%. Many times I'll use 70% in this class, but you got to decide what that comfort number is for you. And it may vary a little bit, may vary from trade to trade. It also might vary from what's going on in the marketplace. Okay, so if we're trying to get out 120 and we say would be happy at say 70% of that, let's add 84 cents to our $1.30, and that would say, okay, get out at 214. We're not going to hold out for 250. right? We're not going to do that, but we will say 214. Let's put that in. Try it again, 214. There we go. And we'll just leave it as a limit order. If it gets to that price, make it good till canceled. Now, this is in order to get out if things go right. What if things don't go right? I'm going to go ahead. I'm going to send this guy on his way to our dynamic diagonals and long verticals class. Chart-wise, if this stock were to break down below this old resistance that should act as new support, especially seeing the nice volume that's moving in here now, that would be maybe a reason to say, this trade is not working out. Olefins are not the place to be, or they've got a snag or something, right? And so we'll watch this technically to make sure it's holding up. We could also consider getting out early. Say the stock makes a big run up. It gets close to our target. And we think, I don't know if that can sustain that type of growth for that period of time. Then we might consider saying, getting out at 60% or 50%. I'm happy about that, because if it runs up and then starts to pull back a little bit, we might not have time for it to pull back and run back up again. So that's another reason this is a little bit more aggressive in the setup, is that we're trying to take advantage of maybe this initial move that takes place here, if it does so for us. All right. Next up, something else that seems, you look in the industry groups that you seem to seeing pop up are stocks that have to do with natural gas. All right. And I looked at several of them here this morning, and a lot of them were pretty good candidates as far as a technical setup, but the spreads were a little bit wide. I mean, even a stock like, say, ConocoPhillips, COP, had a nice move. It ran up a couple, pulled back. Looked like today it's bouncing off of this moving average, which is a 5. Okay, the blue's a 5, the green's a 20. The reason I still have a 5 and 20 up is because I just did a little video on my X talking about looking for a 520 crossover to get into some stocks that maybe have had a little bit of a pullback and they're looking like they're stable and wanting to go up again. But when I looked at the spreads on ConocoPhillips, and we'll put, let's go out here to the March. Oh, it's much more reasonable now. I was seeing this was like, this is a 30-cent spread, which that's a lot more reasonable than what it was. But when I was looking at it, it was like a 70 to 80-cent spread. And that one was like, no. So I'm glad to see that it has tightened up here. But we're passing over it because we're going to look at EOG here. All right. We saw what it did. It just bounced recently off the 5-period moving average. Some people might look at this as today would be a close above the high of the low day. Yesterday kind of being the low day in that 2-day pullback. Popping up. Now it's not closed yet, but it has traded above the high. So people might be interested in getting in for that reason. Now on this one, we're going to do March as well. So we're going to say, is this a little bit aggressive? It is a little bit aggressive. And we are going to look here. We're looking to do, do you know what? I changed my mind. On this one, I wanted to do April. Now that I see my notes a little bit better, we want to give it a little bit more time to move here. We're going to do the 130, 135. So we're going to buy this leg. We're going to sell the 135. And we're going to be able to get into this trade a lot less expensively than just, say, buying a long call. Right? If we were to buy the long call here, it'd be 680 or, maybe midpoint price here. The 135, this is a 10-cent wide spread. Man, that is really desirable to see that kind of a spread there. So let's go 130, which is where kind of it's sitting right now. So 130, 135, we're going to say buy vertical. And on this one, it's a $5 wide spread. So we would be risking 245 to make what? $5 minus 245 would put us at 255. So we'd be, going to the max gain there would be a little bit over 100% return. So we'd be looking for a pretty decent size move here. If I come up here to where's 135, so right where my mouse is about where that 135 is. So we're going to require this stock to move up a little bit. We're going to require some movement. And since it's $5 wide rather than $2.50 or $2 wide, we're going to give it a little bit more time to make that little bit bigger move. Okay, so not quite as aggressive as that March series was that we looked at, but we'll go ahead with the April here. So if we can risk 245 on this, and again, we can lose or risk up to $2,000 in our account. How many contracts can we do here? Do you guys know this by heart now? I hope so. Hope you're getting to that point that you're like, oh yeah, I know the formula. So we're going to go 2,000 divided by 245. It says we could do 8 contracts. All right, 8 is lovely. We'll go ahead, we'll put in 8 here. And then what about a profit target? I want those of you that have been using the profit target, I want you to put in where you're comfortable. And I might go with one of your numbers this time instead of my typical 70 or 65% or 75%. So I'm going to give you a chance to answer that question because I know it takes a little bit of time before when you hear my question and you get a chance to respond, it takes a minute for it to come through. So I'm going to be watching on that. While we do that, I'm going to set this up. We're going to do a first trigger sequential, which means this order has to be filled in order for our exit order to get filled. So we'll say create opposite order. And actually, I want to analyze this trade here as well. All right, Chris, you like 70%. Eric does $2, so you go for a dollar value. Great. Sharon likes a 60%, CB likes a 50%. See, you're each going to kind of find your own comfort level. So that is good. Okay, we're going to go with Sharon's here. We're going to go with 60%. I'm going to write that down so I don't forget. We'll go for 60%. Now, one of the requests that we had in the survey from last week was, in these trades, could you show us the risk profile sometimes? And so let's do that on EOG. So we're going to just come right on the trade, and we're going to say analyze trade. And we're going to come over to analyze risk profile. I had this set on fundamentals. That's where you can see what do these guys deal with. And they produce and market crude oil, natural gas, and natural gas liquids, blah, 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 in the United States. Okay, they're in Texas. Some of you might be from Texas. Let's go over here to the risk profile and see what this looks like. Now, for those of you that maybe are not as used to looking at the risk profile, there's a couple places we want to set some things up. One, right there where my giant fluorescent green hand is, it's pointing to the date. And what we want to plug in there is the date after options expiration. Usually that's on a Saturday, but not always, okay, because we have other times. So the date after options expiration. And then we want to come down here and say set slices to the break-even price on that date. All right, so here we go. And we have a layout of what this might look like. So this is saying it's putting our break-even price here about 132.45. Okay, that's where the break-even is. Our max theoretical gain, we're capped on it. We're not going to make any more than how much here? The max theoretical on this is $2,040. Okay. Max theoretical loss is showing down here where this flat line is, which is 1960. We already kind of knew that. Now it's multiplied it out by 8 contracts. Now along here, let's here, this line from the 0, which is our break even, down to our max loss. This is partial loss territory. And over here is partial gain territory at options expiration. And then this purple line here shows us the value of our spread right now. Well, right now it has quite a bit of time before it expires, okay? We typically are gonna want today's date down here, at least to start with, so we better give us an extra day since we're at the 5th of March today. Oh, Can't do that because I have my drawing tool on. Let's try that again. There we go. Now we have the 5th. So that adjusted just a tiny bit. All right, but that's kind of how you can see that. Now, as the trade progresses, once we put it in, the trade progresses, you can do the same thing. You can just pull it up here, analyze risk profile, put in the ticker symbol of what you're looking for. And then down here, I have it showing hide positions, but once we get into it, we'd want to actually see the position. And so we might choose hide simulations. Okay, so that is the risk profile look on EOG. Again, when might we consider getting out if it doesn't hit our profit target? Well, let's look at this one. It's riding really nicely on this 5-period moving average. And you can see 3/2 is the first date of trading after the war started over the weekend, right? So here's Monday. We get a decent little gap up and a little bit of a run. But these are kind of smaller candlesticks. They're not really tall. And I think that's another reason why we say the moves are decent, okay, but we probably need to give it a little bit more time if we want it to move past our 135 strike, which is sitting up here, right? It needs to move a little bit. All right. Nellie, you like 75%, but you'll close it out at 50% in the first 10 days. Yeah, so if you get it quickly, you're like, get me out. I like that. So the price objective here, Thea, on EOG is we want it to go beyond whatever this short leg is, which is the 135 strike price. Okay. And the quicker it does it, and the more possibly it goes beyond it, then the easier it will be to lock in our percent gain that we're looking for. Okay. So I told you we'd go with Sharon 60% on this one. So 255, which is our max theoretical gain, times that 60% is 153. We're going to add 153 to the 245 to see what our net debit needs to be. We're looking at about almost $4. We're looking at $3.98. And we're going to say we're going to be happy. If we get that target, we're going to be happy campers. We're going to say good till canceled, and we're going to hit confirm and send. Just kind of review it. Make sure you didn't type anything wrong in there. It just gives you a chance to review it and to see, oh yeah, that's about what I was, my max profit's 2040, yeah, 1960. We already kind of did that on the calculator, so these numbers should look familiar. All right, let's send this on its way. Oh, I forgot to put it in our bucket. I will move it to our bucket. All right, I'll do that later. Now, I do want to spend some time. Let's see, where do you see set the risk profile date on diagonal or calendar? The short strike price or the long strike expiration date? Let's go back here. Let's go back to our risk profile. And now we're filled on it. So we're going to change this. Instead of say hide positions, we're going to say hide simulations. We just want to see what we got filled on here. And so your question is, where would you set the risk profile date? Oh, on a diagonal or calendar. Okay, sorry. Now I read the whole thing. You're going to use the later date. On the profit and loss, you're going to want to use the further out options expiration to put in your date up here. But when you come down here to say set slices to break even, it probably is not going to list that further out date. Like if we had one in April or May or June or something like that, it probably is not going to give you that date down here in the set slices. It's just going to give you the 4/18 date. Okay. But up here, you could put the June, July, whatever the date of the longest dated one is. Okay. Good question. Yeah. All right. Want to make sure we spend some time on our current trades. If we breeze through those as quickly as I think we could possibly, then we'll come back. I've got a couple more trades that we could approach doing here, but at least we have our first two on. Oh yeah, CB says, let's talk about the Tesla and NVIDIA diagonals. Yep, it's time to talk about it. Let's head over here. And I'm going to knock out a couple pretty quick. Last week, we put on 2 long verticals. We did one on Circle, and we did one on VNOM. And both of them hit their targets pretty quickly. Okay, so we'll just take a quick look at their numbers. So let's do Circle first. Okay, Circle, it's a fairly new stock. It hasn't been around for a year. In fact, it doesn't even have a 200-day moving average yet. But we got filled on this. We did 7 contracts. We got filled at 250. It's a $5 wide spread. So our max loss was 250. Our max gain was 250. But we said, hey, if we can get a chunk of that, I believe it was probably 70%, but I could be wrong. We said, if we can get 430 out of it, let's do it. Okay. And actually, we said, if we can get 425 out of it, let's do it. Well, it filled us a little bit nicer at 430. What does that look like on the chart? Well, we got in here and it went boom to boom to boom. Got us out yesterday. We had that profit target sitting there, so we didn't have to do anything except collect it. So that particular trade gave us a decent profit. It was 180 bucks per contract series that we had. We had 7 of those, and so we netted about 1260 on that one. So not too shabby. Let's look at VNOM. It actually executed quicker for us. Oh, let's see. VNOM. Maybe I'm typing that wrong. I might have done a typo. Let me just look here real quick. VNOM. VNOM. Okay, I scrambled the letters. All right. Viper Energy. All right. Same thing. We got in here on Thursday. So Thursday was our 28th or 26th rather. So this is the day we got in. It had a nice green candle. It had been bouncing off support. We weren't really using those moving averages last week. And what did it do? It went boom to boom, hit a high of the 48. And I think that's actually where it executed our trade, was on 3.2. So 3.2. So we had a $1.15. We said if we can get a $1.76, get us out. And on 3.2, it ran right up there. And just pretty early in the morning, 7:31 Mountain Time, it got us out of the trade for 187. Okay, so another pretty quick trade. I mean, then this went from Thursday to Monday morning. Okay, so that was a real quick one. So on that one, we netted about 72 bucks per spread, and we had 10 of them. So that was about $720. So on those 2 verticals from last week, we hit profits of about 1980. You add those 2 together. So you're like, hey, if I could do a couple of 2 or 3 of those every week, that might keep some of us content at maybe growing some of our accounts. All right, but maybe not everybody. All right, let's look at a couple in play right now. And the request was for NVIDIA specifically. What did you want? NVIDIA and Tesla. Let's start with NVIDIA. Okay, NVIDIA. We've got both of these are diagonals, and these diagonal trades tend to, the way that we've got them structured, take a little bit longer to hit targets and such. And our plan is actually not necessarily getting out initially, but maybe selling multiple contracts against whatever we're long. So in this case, we are long. This is our longer dated put at 170. And ideally, we want it to go up in value, and it really hasn't. The short leg, we would love for it to decrease in value. We sold it for 655, but it hasn't decreased in value. It's actually gone up a little bit. So both of these legs are working against us. Okay. What does that mean? Must mean that NVIDIA isn't doing exactly what we want it to do. All right. So we got in the 26th. Oh, interesting. We got in here earlier on the day, but look what it did. It pulled back immediately. So yeah, it kind of makes sense why we're down on this trade, whereas we'd want it to run up. Now we're also have a situation where our option is in the money. See this little tiny ITM here? That's letting us know our option is in the money. We only have 1 day left, which is tomorrow before it expires. We intentionally want to roll that today. Okay. So we are going to take a little bit of a loss on our 190 put, but what we're going to do is we're going to close it down and we're going to sell another one. And we're going to sell it for the next Friday out, which I think is going to be the 13th, another Friday the 13th. To roll it, we want to say create rolling order. And it's going to call it a calendar because we're going to be using some different dates. And so it goes and grabs our 190 short leg and it turns it into a positive because we want to buy that back. Then it puts the next expiration date out here, which is March 9th, which is Monday. We don't want to go for next Monday. Okay, we are going to go for the 13th, although these do have more frequent expiration dates. If you want to be really aggressive and really active, you could experiment in your paper account doing that. But what kind of strike price might we want here? We come here on the trade tab. I had previously determined the one that we were going to go for here was going to be the 180 strike, but I want you to see this. So we're going to go for the 13th. And on the put side, we're going to go for something that's a little bit out of the money. Okay. This one we can see our 190. See how that would be in the money. So we're going to go a little bit out of the money. We could go 180.250. We could go 180. NVIDIA is a pretty decent mover though when it moves. So we're going to go for the 180 strike price here. So going back to our trade, we'll go to the 13th, and instead of 190, we're going to go 180. A little bit out of the money. And it's going to, this is what our debit is. That's fine. Our intent is we're hoping to collect most of that premium on the leg that we're selling for the 13th. Use that premium to help pay down the price of the original put contract that's still in play, our April leg. We're hoping to collect premium and reduce that net debit, and we intend to do it several times before options expiration day. Okay. And we started this one, I want to say about 3, maybe 4 weeks ago when we initially did it. So let's go ahead. We just did one contract, I think, in this case. So we're just going to go ahead. We're going to hit confirm and send. If it's confusing to you to do it as a diagonal or as a rolling order with the 2 legs, just close the first leg, go buy that short leg back, and then sell the long leg. Okay. All right. Akamai. Akamai, love his little heart here on Akamai. We're up on this trade, and this one only has monthly expirations. That's okay. Sometimes we're used to working with a lot of weeklies. This one doesn't have weeklies. But our longer dated leg here is the May 25. We got into this trade January 22nd. So we rolled a February option, and now we have the March option. Okay. On this March option, let's see how decent of shape it's in. Got 15 days before it expires. We brought in 105 here, and it's down to 85 cents. So we're making a little bit of money on this leg. It's not going to include what we gained or lost when we sold it in February because it's no longer a working position, so it's not going to reflect that. Okay. But we're up decent on that. So we're going to just let it continue, right? We're going to want it to decay as much as it can. And we'll see what it looks like next week. If it looks like maybe it's time to roll, maybe there's only, say, 20 or 15 cents in here, then we might roll it next week, but we'll see. What does this stock need to do in order for that to happen? Well, it's got to recover. Oops, that's not Akamai. NVIDIA definitely needs to recover. All right, it's kind of been going up and down, kind of sideways since we were here last week. Maybe a little bit of movement. So that's what we're going to want to see out of Akamai. All right, that was Tesla. That was Akamai. Oh, no, that was NVIDIA. Tesla, let me just show you real quick on Tesla. And then my time's going to be mostly shot. We need to roll this guy. All right. Let's see here. Our long leg is April. We just talked about this. Did it? Might be. Let's see here. No, it's just NVIDIA. We didn't do Tesla, but it is in the same boat in the sense that it's only got 1 date options expiration. Our plan was to roll it today. That's nice. It's down to $1.13. We sold it for $4.40. So we're going to net there, what, $3.26 or something like that. Okay. In the interest of time, since my time is up, just know that's what I'm going to do is when our class is over, I'll go ahead and execute that. All right. So a couple things. One, subscribe to our Trader Talk so you can find our content, just like I showed you earlier in our session. Click in the bottom right of the screen where on the graph you see the blue YouTube logo. Click on that. That'll subscribe you. So it makes it so much easier to find our content. Okay. I did not see a survey out here today. All right. So you are off the hook for that. But if this was helpful for you today, hit the like button on the way out. I think we have a couple of questions in here. The live account is not acting like paper money, says CB, and that can be the case sometimes. Sometimes paper money is nicer to you than the live market is. That is true. I will acknowledge that. Is there a way to modify exits perhaps lower so they fill? Absolutely. You could do that. If you said, I'm like, say you would be happy at getting, say on Tesla, you would be happy at getting out here at $1.50. Can you go set that? Sure, you can go buy it back, or you can set up a rolling order too. Yeah, so your criteria is a little bit different. We closed Morgan Stanley. It was like pitching pennies to chase a loser. We couldn't do it anymore. So I did. I closed out that trade. I forgot to highlight that, but my time is up, so I've got to run. Coming up next is investing in dividend stocks with Cameron May. So take a break, come on back. We'll see you here in 15 minutes. Bye-bye.